Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good afternoon. Welcome to Halftime Report. 12 noon, halfway through the trading session. I am Reema Tendulkar, and markets are struggling today as trade war worries resurface. We're down just about 0.5%, but not bad when you compare it to the rest of the Asian markets. So Hang Seng is lower by nearly 2.5%. The Chinese markets have been under pressure for the last few days, having lost nearly 4.5% to 5% so far this entire week. Though as we speak, metals are seeing some amount of buying interest at lower levels. So Hindalco is now up nearly 1%, and Vedanta too has seen a recovery of nearly 2.5% from the low point of the day.
Hi, Reema. Well, Reema, I was looking at a couple of stocks. Ashok Leyland, that stock saw a lot of selling pressure. There's quite a bit of delivery-based buying as well in Ashok Leyland. So, in an otherwise weak market, that stock has moved to the high point of the day. And even in the futures market, the total number of open interest, though open interest, if you compare it with a couple of trading sessions ago, that's come in lower as well. So, there is some short covering as well on Ashok Leyland. Piramal Industries, well, if you look at that one, there are reports that suggest maybe, in fact, they can go ahead with the demerger. It's been reported before as well. But Piramal Enterprises is up close to around 6% now in the last 1 month in an otherwise wobbly market. That's given you returns of close to around 22% approximately. And from the auto space, NRB bearings, we have been pointing this out, that from the bearings play, it has the highest amount of exposure to the auto space. And that stock as well, that spiked up in the last few minutes. If auto sales are goods, then in fact, the highest amount of dependency among the bearings companies, NRB bearings, to the auto space rather than the industrial space. So that's why that stock as well is up close to around 4.5% on mid-cap index in the green. Good to see that we are seeing some buying from the broader markets.
Let's straight away get to the top stocks that are moving and shaking in trade with our entire research team. Ekta, you've got an update on suboxone?
Well, it's not a recent update with regards to Dr. Reddy's, but it seems as though the movement on the Dr. Reddy's this week itself has been a lot of optimism based on what the recent developments on suboxone are. So the stock itself is, up around 6% on a week-to-date basis. The incremental update that came in on suboxone earlier in this week is that the US court is going to listen to the appeal which is filed by Dr. Reddy's on an expedited level. So that's going to be in the first 2 weeks of October odd. And this is versus, no sort of timeline. And, a timeline could be a year and a half. So what this means is that there is more optimism that we could probably hear on that suboxone appeal where there is a preliminary injunction against Dr. Reddy's from selling that product. And hence, we could probably see some amount of, sales accumulated in case the court rules in favor of Dr. Reddy's come October. So that is the development that the street is probably watching very closely, and that's the reason why you're seeing the stock move up this week.
Okay, thanks so much for that, Ekta. Well, let's hop across to Sonia. She's here to tell us about the auto sales numbers. Sonia.
Well, thanks for that. The ones that came in post-market hours yesterday were largely disappointing. The most disappointing of the lot was Eicher Motors, because the Royal Enfield sales have come in at the lowest level in the last 11 months. Clearly, we're seeing growth slow down for Royal Enfield. The waiting period for most of their products has gone down as well. We don't know if it's some sort of a structural shift, but there is definitely something to be worried about. This time, Royal Enfield sales grew just 7% at 69,000 units, compares to an average of 74 to 76,000 units for the last 6 months. So that's the way this, the cookie has crumbled for them. For Hero MotoCorp as well, there's nothing alarming, but the sales are marginally lower than street estimates. So the total sales growth has been just 9% year on year. This compares to Bajaj Auto's 30% growth. TVS Motor was also in double digits. For Hero MotoCorp, the total sales on a month-on-month basis have gone down by about 4%. So that is something to worry about. Remember, the previous 2 months saw 7 lakh plus units, and this month they've seen, in the month of July, they've seen 6.79. So there's a slowdown there. And finally, for Tata Motors, the domestic numbers were very good. There's no impact yet of the trucker strike or the axle load changes, but all the street is focused on is the Jaguar Land Rover slowdown. Back to you.
Okay, thank you very much for that. Ekta, over to you on the Piramal demerger.
Well, these are just reports which are doing the rounds right now with regards to Piramal, which could be contemplating a demerger in Piramal Enterprises. Now, remember that Piramal Enterprises initially only comprised of the pharmaceutical business. Eventually, the financial services business was, started within the operations itself. So, the street is contemplating that the demerger of the two businesses could be something which could be on the cards. So, eventually, the pharmaceutical business, which is around 36% of total sales, could be separated, and the financial business, which is over 50% of sales and has risen from a little over 40% in FY18, could be separated from the two businesses, and Piramal Enterprises would eventually become a holding company for both of those. It is a logical step for the company to take, considering that both the businesses are now reported together, and hence we could probably expect this. These are reports. We haven't verified the reports independently.
Okay, as we speak, the stock hits 3,000 rupees, up more than 22% in the last 1 month itself. But the other stock that's been an absolute, great performer in the last 1 year or so is HEG. Remember, for the first quarter, the numbers look great. The Q1 EPS was at around 190 rupees, which was the share price close to around 18 months ago. We spoke to the management earlier today, Mr. Ravi Jhunjhunwala, and he said he's sounding optimistic about the outlook for FY19. Let's hear him out.
10 years or so, our policy has been, our payout ratio has been between 30 and 35%. And given the extraordinary numbers that we saw last year, our last year's payout was about 38%. And I believe we will, there's no reason to believe that we will not continue with this level. And 35 to 40% payout is a fairly large number. And I'm sure we'll keep doing that. Last year, our run rate was about 80%, and for the year, we had guided to high 80s. So that ramping up is happening. It hasn't happened much in the first quarter, but going forward, this ramping up from the low 80s to, let's say, high 80s is going to happen over the next 3 quarters or so. So the tonnages are going to go up slightly.
All right, and in a setback for Reliance Communication, Ericsson has objected to the settlement terms with Reliance Communication. Ashmit joins us for more on that. Ashmit, what could be the reason for that?
Well, before we get into the reasons, just to give the viewers the benefit of perspective, Ericsson was an operational creditor that had sought outstanding dues of nearly 1,600 crore rupees. However, after mediation by the NCLAT, the two parties had decided to settle the amount, settle the payment at 550 crore rupees. Subsequent to that, the matter came up before Apex Court, only as a matter of procedure, wherein both the parties were required to express their consent for the settlement and then perhaps close the matter. But what's critical here, in what appears to be a U-turn, Ericsson has clarified its position that it is objecting to the settlement in its current shape and form. It's objecting to the terms of settlement that are being laid down by RCOM, that it is not agreeable towards it. So it does, in a manner of speaking, perhaps look like a U-turn as of this stage. What's important is that the Apex Court will be hearing the arguments of Ericsson tomorrow morning. But from what we learned from sources, after speaking to various sources, we understand that there are outstanding issues between both the sides in terms of arriving at a common terms of payment as far as the settlement amount is concerned. Keep in mind that the settlement amount is 550 crore rupees. There are questions over the terms of that payment, which is now angered Ericsson. Of course, the matter will be argued tomorrow. Now, what's interesting is that this comes on the back of the DOT looking to cancel the spectrum that had been allotted to RCOM. That is another area of concern for the lenders. The lenders have written to the DOT to reconsider their decision. And now this development here with Ericsson perhaps doing a U-turn, this could spell trouble going forward as far as the RCOM RGO deal is concerned. All eyes now on tomorrow morning on Ericsson's arguments before the Apex Court. Back to you.
Okay, all right. Thanks so much for that, Ashmit. But Lata's with us. Lata, tell us, what kind of impact can it have on banks?
Well, they're trying to put out so many fires on the RCOM front. Basically, if Ericsson succeeds in telling the Supreme Court that they are not agreeable, then the case comes back to the NCLT. Then it's a long process, which all of you are very familiar with. The Committee of Creditors will have to appoint an RP, and the RP will then ask for all the bids for the various parts. Maybe through that process, RelGeo will come and pick up a part. But, the whole thing gets postponed, and it's an awful lot of money. Not all of which has been provided for. It's a 45,000 crore debt tag now, when last reported in FY17, I think RCom said that the debt on its books is 39,000 crore, but it gets accumulated interest. And when we last heard on the SDR, on December 26th, when Anil Ambani held a press conference on RCom saying that they are not going to avail of SDR. At that time, he said 45,000 crore, of which $3 billion is owed to Chinese banks. So that's maybe about 20,000 crore. Then you're left with a balance about a little over 20,000 crore. Some of it is FCCBs also. A balance 20,000 crore. And the most, I mean, ICICI Access have very little of this, if at all, if any at all. It's largely SBI, the consortium leader. And then there's Canara, BOI, BOB, PNB, IDBI, all of them. And therefore, they must have provided, according to analysts, they're just guessing broadly 25% of the total loan. And therefore, a huge amount of provisioning will come in because you have to wait till the NCLT process gets over. And remember, the NCLT is full in terms of capacity and its ability to hear cases. So this could stretch rather badly and spoil the provisioning numbers for FY19.
Okay, thank you very much for that. By the way, those are Godrej Properties numbers. While there is a revenue growth of 24.5% to nearly 1,000 crore, the bottom line has shrunk by 65% to 34.3%, and the key reason is a sharp 40% increase in the cost of sales. So that has gone up from 600 crores to 850 crores. So I'm not too sure if this is on account of the new accounting standards where real estate companies have to now use the project of completion method, and that is increasing the cost of sales for the company. So maybe that could be a factor. Because there is a revenue growth of 24.5%, but the bottom line is severely impacted. And, it's not a company which is very high finance costs. Finance costs has gone up by 20-odd crore year on year. The sharp jump is actually in the cost of sales. So that's shot up by 41% to 857 crores.
I'll be wanting to know what is the collections. That's more important, for Godrej Properties. What exactly is the collections? How much is the average realization per square foot? And where are they realizing that as well? Those are the key details. The profit and loss account for Godrej Properties would not be really fair to look at it only on that parameter. We'll have to couple it with what exactly is the collection. So that's going to be rather important. We have seen this numerous times. Once Godrej Properties, they come out with the set of numbers, the stock takes a bit of a correction, and then after that it recovers. And as we speak as well, it's recovered close to 100% from the low point of the day. So we'll wait for further details, and then in fact we'll be able to analyze whether or not these numbers are really a weak set of numbers, or in fact the collections, how were they in the past quarter, what's the inventory they're sitting on, and what's the pipeline going ahead as well. But on that note, let's do a quick recap of all the top buzzing stocks we just covered. We had Reliance Industries, Dr. Reddy's HEG, Piramal Enterprises, L&T Tech, auto stocks like Tata Motors, Eicher Motors, Hero Motor Corp, and also Bank of India, SBI, PNB, IDBI, as well as Bank of Baroda.
Get into a break. On the other side, Navneet Education is the next stock on our radar on the back of a good set of Q1 numbers. Get chatting with Ganesh Kala, the MD, on the other side.
Welcome back. Then keep an eye out on a few of these stocks that are moving around and have moved up sharply in the last few minutes. You pull up Gujarat Borosil. I wonder what's going on there. The stock is up nearly around 13%, and more than half the returns have come just in the last few minutes. So pull up the intraday chart out there. That stock is spiking up as we speak. Finiotex Chemicals as well. That's the other one from the broader markets is doing well. That as well has moved higher in the last few minutes. So keep an eye out on that stock. And the other very, very volatile counter, we have BEML. That as well, suddenly it was down close to 2%. Now it's moved into the green. So BEML should come up for you. Artica team as well is alerting you. But Gujarat Borosil, pull up that stock. Volumes are massive out there. Keep an eye out on that stock as well. It should come up for you on the screen. Well, Navneet Education, that's the stock in focus on the back of a rather good set of numbers. To discuss this, we have Mr. Gala, the MD of the company, who joins us on the phone line. Hi, Mr. Gala. Thanks so much for joining in. We tried connecting you with you earlier, but good to have you now, sir. These numbers look very, very good. Is it the impact of GST implementation? Is that helping you all? Or was there any large order in the past quarter?
Hi, good afternoon. The results of the first quarter is on account of majorly the higher exports that we have got. So there is no impact of GST or reason of GST to grow the business. So exports have almost grown double in the first quarter.
Oh, they've doubled. Exports have doubled. Okay, all right.
Yes,
As a percentage of your total revenues, what does exports account for and how much has it grown?
So at present, it is almost 33% of our revenue.
Okay.
At the year end, of course, it will be around 15 to 16% of our revenue. Okay. But this is mainly from the US market, and that trend is likely to continue.
Okay, Mr. Gala, if you could just once again give us those numbers. As of Q1, exports are 33% of your overall revenues, right?
Yeah, that's
okay. By the end of FY19, what are they likely to be? And can you sustain this 100% growth rate in exports? Was there a one-off element, an aberration?
No. So as far as my overall revenue for FY19 is concerned, exports should contribute around 17 to 18% of total revenue. It is not one-off the order. The orders have come in and which are likely to continue. But of course, such growth year on year is not expected. So overall, we are going to grow from here again.
So for the year, what kind of a growth number, sir, you can do?
As far as exports are concerned, that growth will be around 35%.
Exports will grow 35% and the total entity will grow by how much?
Entity should grow between 15 to 17%.
15 to 17%. All right. What is the kind of order visibility that you have in the domestic market as well as the export market to give us these kind of growth numbers?
So domestic market, our main season, which is when back to school, that has already happened in the first quarter. Only certain spillovers which we could not publish in the first quarter is happening in the second quarter. So there is no confirmed orders, but based on our past experience, we are likely to do much better in the second quarter as well, as far as publishing business is concerned. And as far as exports are concerned, again, major revenue comes from back to school season of US market. So now the new orders for the next year we will get only in the month of October, November.
Okay. Okay, a couple of questions, sir. Have you started supplying to CBSE boards? And also, I remember you had acquired Encyclopedia Britannica. That started contributing revenues?
Yeah, that's right. But that number is not reflecting here since we have not consolidated them yet.
Okay.
So that company renamed as Indianica.
Okay, Indianica.
Yeah, so that is doing quite well. The product portfolio that we wanted to increase has already happened.
Okay.
So the result of which will be seen only in the fourth quarter, which is the main season for CBSE business.
Okay.
Okay.
Mr. Gala, we thought GST would help your business as well because a lot of the stationery is also from the unorganized market. But you're saying the GST benefits haven't yet accrued to the company.
I'm not saying it has not accrued. It has accrued in the domestic stationery market. But my point was that the major growth in the first quarter is from the exports of stationery.
Okay.
So overall, we have benefited.
Okay. What is the market share of organized to unorganized post-GST? And what was it earlier, pre-GST?
So it is too early to say because it is just 1 year that we are in GST era. Overall, we believe with the market, which was around 18% with the organized sector, will grow to around 25% in next 2 years.
Okay, all right. Mr. Gala, you know, if I look at your stock price, it's corrected from around that 180 rupees to around this 125 rupees odd. Your numbers are looking good. You're sounding quite optimistic as well. You had done a buyback, right, in the past? Do you?
Yeah, 1.5 years ago we did.
All right. Do you all plan on doing a buyback in future as well? And if you could tell us, what does your balance sheet look like?
So balance sheet overall, our net worth is around 800 odd crores.
Okay.
And fortunately, we do not require huge cash in the business going forward. Maybe for a year or so we may require. So it has been continuous trend of the management to reward the shareholders one way or the other way. So that we continue.
So buybacks possible again?
No, there is no discussion right now. But yes, somehow we have always been distributing more than 50% of the net profits by way of dividends. So that way, some of the other things will continue to come.
Okay, just one final question then. Is the company looking to add any more revenue streams? My colleague had earlier asked, have you started supplying to the CBSE board? If you could answer that, as well as tell us that going ahead to improve the revenue profile of the company, are you looking at adding any additional revenue streams?
So the revenue stream through India Nika, which we acquired 1.5 years ago, and that is catering only to CBSE market.
Okay.
Yeah, so that is likely to grow quite fast from here. So there we are likely to see around 30-odd% CAGR growth for next couple of years. So our presence in CBSE market will continue to grow for next few years.
Okay.
And yeah, there are no other revenues planned beyond our state of Maharashtra, Gujarat and CBSE.
Okay. Thank you, Mr. Gala, for joining in. NCC's won orders worth 689 crore in July. Stock is higher by nearly 4.5%. But some more details are emerging on Godrej Properties, which was getting flashed on your screen. So the area sold in Q1 is 35% lower on a year-on-year basis and 21% lower on a quarter-on-quarter basis. Also, the booking value is 44% lower on a year-on-year basis and 22% lower on a quarter-on-quarter basis. So I guess if the booking value is also low, it gives you a sense of what the visibility and the future numbers are going to look like. So these two numbers are looking disappointing. Areas sold 35% lower year-on-year, booking value 44% lower on a year-on-year basis, and both the numbers have sequentially also declined. So these were those additional details that the street was awaiting.
And that's why the stock now is reacting to those set of numbers. Otherwise, the street was waiting by for these numbers. It was a little jittery. It was down only around 1% odd. In fact, they were seeing some recovery. But these numbers, let's get them up actually for you on the screen. The total area sold as well as the booking value. There's a sharp decline on a year-on-year basis, and that explains why the stock has moved to the low point of the day.
I think the mid-cap index has picked up some pace. So let's get the chart up for you on your screen. So now it's higher by close to about 50 odd points. There you go, at the high point of the day. A steady up move in the last 30 minutes. But let's get chatting about NBCC. Manisha Natarajan, our colleague, caught up with Anup Kumar Mittal, the CMD of NBCC, and began by asking him about the company's initiative to take up projects that are stuck, and if the management has looked at it and thought of it in terms of the requirement, the funds from the government, monetizing land parcels. Listen into a slice of that conversation.
Government of UP has constituted a committee under the chairmanship of Secretary Urban Development. I am also one of the members. Some of the developers' projects have been offered to us. We have started doing the due diligence of those projects. Okay. It's not a one-day job because number of projects are there. There are thousands of buyers. If I'm not wrong, Amarpali itself, they have around 42,000 buyers. So we are making the statement, yes, we are willing to take up these projects. But definitely, first, this should be viable commercially. Second, this should be doable project. Means there should be sufficient FSI available, sufficient money should be available. All the agencies should cooperate, whether Noida Authority, Greater Noida Authority, or banks, or lending agencies. So all these subjects are very large subjects. So it's not a one-day job. Our teams are working there. They have visited all the projects of Amarpali. Of course, they have not visited JP. So I think within a week or 15 days' time, we should be in a position where we can submit our report to Ministry of Urban Development.
Okay, so in 15 days' time, you feel that you will get a clear sense of the monies which will have to be invested and how can you complete those projects. Is there a sense within the government that if there is a bridge fund requirement, they will support you?
You see, government is very serious about this subject. They feel that these 3 lakhs buyers should get their houses in Noida, Greater Noida or Yamuna Expressway. That's why government has constituted this committee. And this issue was discussed that this bridge funding, how this can be made up. I mean, either these banks should finance these projects. Later on, they can claim FSI or whatever revenue generation will be there. They will share that. So there are a number of ways, but government is very serious about this. So I think, as I said, within 15 days, we'll submit our initial report to government. Then government, there are a number of stakeholders other than buyers. Amarpali or JP or any other developer is one, shareholder. Then banks are another shareholder. Then Noida Authority, they have to take money. So there are a number of agencies. So I think there is a solution for this.
There is a solution and you're serious about it.
Definitely. It's not only business. We feel that being a public sector company, this is our responsibility also to sometime bail out this kind of situation for whether public or government.
All right, keep an eye out on a couple of stocks. NBCC is reacting to, that news piece that we put out for you. The stock has moved to the high point of the day, so keep an eye out on that one. We also have a couple of other stocks that are moving around. You pull up Nalco. Remember, there was news overnight that, in fact, the coal availability has gone down. So now they're purchasing power from the grid. That stock seems to have recovered from the low point of the day. Remember, it's corrected from around the 95 odd mark all the way to around 60. Now it's seeing a bit of a bounce. Interesting to see some of these metal stocks bouncing back in the last few minutes. How do you trade the Nifty from here? The Nifty is down close to 60 points. The mid-cap index, though, is up close to around 0.5% as we speak. So clearly an outperformance from the broader markets. Ashwini Gujral and Rajat both are with us. Good day, gentlemen. Thanks so much for joining in. Ashwini, what's the trade on the Nifty? We're virtually unmoved for the last couple of hours.
See, what's clear is that there is no follow-through on the downside.
Yeah.
Two spaces should have led the weakness. Both are not doing that, which means that metals, most of them are trading at the highs of the day. Financials are also finding support because maybe, crude prices, metal prices lower, so that helps inflation. The main issue is that 11,270 is a strong support that is held on. And today, given that we have, Bank Nifty expiry, etc., we could have a recovery. Even Asia is recovering going into the close. So this is a good time to enter into Nifty as well as Bank Nifty. So here, HDFC Bank has had a couple of bad days, and today is an expiry. Generally does well on expiry after a downside. So that's a buy with a stop of 2120, target of 2175. RBL Bank is a buy with a stop of 565, target of 590. And Ashok Leyland is a buy with a stop of 118, target of 126.
Okay, Rajat, your thoughts? Are you also sensing no follow-through on the downside? How will you trade the Nifty and stocks?
See, as far as the Nifty is concerned, I would say that unless Nifty breaks 11,260 to about 11,230, this support zone, there is not much fall to be expected on the downside because follow-through really is dwindling. So chances are that we would see a recovery, and in that recovery, the key levels to watch out for would be 11,330 to about 11,335. If that gets taken out, then you can expect real good momentum coming back. Otherwise, it would be more of a range-bound kind of a scenario. Having said that, I have chosen two stocks. Jubilant Foods, I would put a stop loss below 1417 and target would be 1444 and 1449. And Sun TV 796.80 is my stop loss, buy at current prices. 812 is the target, and if 812 gets taken out, then 817, 818 kind of levels could well be reached. I have dropped MGL from my list because that has already stopped out.
Okay, all right. Thanks so much for that, Ashwini, as well as Rajat, for joining in and giving us those calls. Well, let's see how the European markets have opened up. Let's pull up those markets. Remember, overnight, some of those markets, they did quite badly. The FTSE, in fact, was down close to around 1% overnight. All the three markets, in fact, have opened up with cuts. Remember, those trade war fears, they have resurfaced. And that explains why. The CAC, the DAX, as well as the FTSE, all of them trading with cuts of around 0.5% to around 1%. The DAX is a relative underperformer, if you just look at the three frontliners. We'll slip into a short break, though. On the other side, we'll get chatting with the management of Orient Refractories. Remember, they announced their numbers, but more importantly, they announced merger of some of those unlisted entities. We'll get chatting with the management on the other side of the short break.